UK-based chip designer ARM making its public debut on the Nasdaq today. And here's what you need to know. Pricing for 9.5 million shares, coming in at $51 a share. That's at the top end of the $47 to $51 range that the company was aiming for. This puts the company's valuation at $54.5 billion. There's been a lot of excitement around ARM's IPO, and we'll see if that excitement is reflected in the stock price when trading opens. Here to take a deeper dive into the outlook of the company, we turn to Yahoo Finance's Josh Lipton. So Josh, what's the so-called bull and bear case for ARM here?
Yeah, great question, because listen, as you guys are mentioning, there's a ton of interest about ARM, and that's for very good reason. This is one of the most important semiconductor companies on the planet, full stop. And now ARM is ready to make its return to the public markets. ARM creates architectures or designs that other companies use as blueprints when designing their own chips. That's how ARM makes its money, by licensing that IP. And that's one of ARM's strengths. Its chip designs are ubiquitous in the world of smartphones, from Apple's iPhones to Android devices. In fact, ARM designs the architecture of chips used in about 99% of the world's smartphones. Of course, that can also be a challenge given the slowing smartphone market. ARM said in its prospectus that revenue in its fiscal year that ended in March was actually relatively flat at $2.68 billion, and net income fell 22% to $524 million. ARM isn't sitting still, though. It's leaning into new, more profitable areas like data center and PC, and the company sees opportunity in the red-hot trend of, you guessed it, artificial intelligence as well, saying it's going to be central to this transition towards AI and machine learning-enabled computing. But how great is that opportunity really for ARM? Longtime tech analyst Patrick Moorhead says he sees ARM as a secondary player in the AI market. It's not NVIDIA, he says, the poster child of this AI boom. But worth noting, Patrick points out that NVIDIA did develop a super chip for use in data centers called the GH200, and that is a combination of NVIDIA's GPUs and ARM CPUs. In other words, ARM is in the game. And finally, of course, we do have to talk about China. About 25% of ARM's revenue does come from China in its latest fiscal year, and given geopolitical tensions, economic challenges, and export controls, that is another risk investors are going to consider before putting money to work in ARM, guys.
Yeah, so given all of that, it seems like there was a lot of demand, right? We talked about it being 10 times oversubscribed. So can we extrapolate things for the bigger IPO market, or is ARM sort of a unique case?
Yeah, it's a great question, because as you mentioned earlier, Joe, you brought up a very good point. It is kind of unique, right? This isn't your typical venture-backed startup making its public debut. It's a return. It was interesting because I spoke to Greg Martin over at Rainmaker, and I like to talk to Greg because Rainmaker, it's a broker-dealer. It helps facilitate secondary trades in pre-IPO companies. So Greg kind of has a unique insight into startup land. And his point was, listen, from his discussions, there are a lot of private companies kind of waiting in the wings. They are interested in making a public debut, but this is the moment they're kind of waiting for. They want to see what is the reception to ARM, what's the reception to Instacart, how positive and strong is the demand. And then Greg says, depending on this, maybe we see these IPOs, it goes from a trickle to a stream, who knows, maybe even a flood.
And we're going to talk to him more about it later on the show, actually.
Excellent.
Good tease.
Great guest.
Thanks, Josh.
Thanks.
Well, chip designer ARM Holdings going public on the Nasdaq, as we've been discussing. This comes amid a recent uptick in the number of IPOs. There have been 73 this year. That's up nearly 18% from last year, according to Renaissance Capital. But the uptick's still a far cry from the highs of 2021 that saw nearly 400 IPOs raise over $142 billion. And forget about the SPACs that we saw that year.